Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is November 4th, 2014. I'm going to do 5 currencies in 6 minutes, so let's get going. Take a look at the euro versus US dollar. We found support against the 124.50 level. What's the significance of that in trading here today? If you go back and take a look at the low from early October, this was a low for the year. That level came in at 124.99.6, and that's where the market found support in trading here today. Right there at that 124.99.6-ish type area right here before the market moved higher. We did have some rumors coming out of Europe about ECB's drawing maybe being replaced by someone a little bit more hawkish. That sent the euro to the upside, but we did find some resistance against the 71 to 84 level. Those levels correspond with these lows right here and this low right here. That area right there set up that yellow area, and we went up and tested it here on Friday's trade, only to have the market come back down. Today we're back up to that level, found resistance again, and we're starting to see the market rotate back lower below the 125.71 level, below the 38.2% retracement, below the 100-hour moving average. So the bias is a little bit more to the downside here for the euro versus US dollar. Stay below the 84 level, keep the bias to the downside, move above that level. I don't want to see the price move above the 04 to 13 level this week, okay? Just keep that level in mind. As long as we stay below that level, I think the bears remain in control. Let's take a look at the pound versus US dollar. This currency pair really doesn't know what it wants to do in trading here today. And you could say even yesterday we went to the downside, we moved all the way to the upside and then back down. So up and down today. Lots of little ups and downs, little reds and greens bars right here. We did move above the 160 level. That 160 level corresponds with the 50% retracement. It'll move up from the 2013 low to the 2014 high. 50% retracement comes in at 160.09. And the 200-week moving average comes in at 160.20. Remember that 160.20 level, that's this level right here. And the market couldn't get above that level in yesterday's trade and couldn't get above it in today's trading as well, even when the euro was moving higher. So we started to rotate back to the downside, fell below the 100, fell below the 160, and now we're trying to move our way back above the 160 level. Maybe there is a little bit more, another move to the upside here today. I don't know, but the bias remains a little bit to the upside, a little bit more bullish for the sterling versus US dollar. Need to get above the 160.22 level, and then we're going to go and test the 160.44 or the 200-hour moving average. That's the green line in this chart. Speaking of moving higher, the dollar versus yen, of course, has been moving sharply to the upside. But not today. Today we're down on the day. Today is a correction day. We did have this gap on from Friday to Monday's trade between the 112.46 and 56 level. I'm going to add the 112.41.6 level as another level of importance. That level corresponds with the 61.8% retracement of the move down from the 2012. This is a monthly chart, folks. 2012 high to the 2011 low. The 61.8 comes in at 112.41, and that's where basically we found some support or resistance, I guess, on Friday's trade. Went up to 46, and this week we found support against the 56 level, just 15 pips away from the 41 level. So we are staying above that level, of course. Of course, the Bank of Japan surprised the market by surprise stimulus on Friday, and that sent the market. And by the way, the Nikkei's been surging to the upside as well. It sent that to the upside, and when that goes higher, we tend to get the higher dollar versus yen. Lots of people calling for higher levels in that currency pair. But there is some consolidation, some correction going on at the moment. We'll see if that continues. If the market comes down to this level around the 112.41 to 56 level, pay attention to that level. If that level holds, then we're okay for the upside. We continue to move to the upside. The bulls are still in control. They're just sleeping right now. They're just hibernating a little bit. So be aware of that for the dollar versus yen. Let's take a look at the dollar versus Canada. This is another currency pair that's been moving to the upside here over the last 5 trading days. Move from a low of around the 111.18 level all the way up to the 114.26 level. About 310 pips or so to the upside in that move. Now off the daily chart, if you connect this high with this high, and we went a little bit above here, and then we reestablished the level, and then went above here. No closes above that trend line, including today where the market went up and tested that trend line right around the 114.23 level. The high for the day came in at 114.26 level, so just above that level, and the market fell off of that. If you take a look at the hourly chart, we also came up near the high topside trend line here as well, into a nice little channel here, and the market rotated to the downside. We do have support down here around the 113.71 level. That's a low price on the channel, and we'll be watching for any break of that or and momentum to perhaps signal that the market has further moved to the downside. We can break below it by just kind of going sideways and moving our way way through here, but it doesn't necessarily mean that we want to see momentum. Momentum is going to tell us, and a momentum is defined by a big bar or something like that, a fast and big bar. This is a momentum bar. We want to see something like that to the downside here for the dollar versus Canada if we're going lower. But the bias is just corrective right now. Off the 5-minute chart, we are showing that correction. We are staying above the 38.2 to 50% retracement. That's this yellow area right here. As long as we stay above that level, then things are still a little bit more bullish. We did fall below the 100-bar moving average here and again here. So we are losing a little bit more momentum. You can see lower highs as well, suggesting that momentum shift. Now, finally, let's take a look at the Aussie versus US dollar. We had the Reserve Bank of Australia come out last night. We also saw trade numbers and retail sales. The trade numbers were pretty pathetic from a deficit standpoint, but imports and exports rose to the upside. And we also saw retail sales come out better than expected. But the Reserve Bank of Australia still warned against the currency being too high, but that didn't stop the Aussie versus US dollar from moving back to the upside. We did come down to a support area. These are just old lows here. We still remain in kind of a sideways market here. For the Aussie big sideways market. Moved back above the lows right here and went up to the 38.2% retracement of this move to the downside. Stolen against that level. This yellow area is our correction zone. Probably don't want to see the price move above that level if we're going to keep the bias to the downside. So there you have it. 5 currencies in about 6 minutes. Of course, we have some big events coming up with the ECB interest rate decision on Thursday. We also have the unemployment statistics starting to come out tomorrow with the ADP, and then we have the non-farm payroll coming out on Friday. So be aware and be prepared. Know your technical levels. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.